Good rising, good afternoon, good evening, or good night. I am Tayla Andre. Waking up with Tayla Andre has absolutely nothing to do with the time of day that we link up, but about waking up your third eye with unorthodox conversations leading to universal consciousness. So, a lot of people are going crazy regarding interest rates and mortgage and wondering, like, I have buyers that are scared to purchase, and everyone's asking, like, what is the market going to do? Is the market going to crash? Are we going to be in a recession? As a seller, should I sell? As a buyer, should I buy? What's my next move? What should I do? Taylor, I have so many questions. Interest rates are 3.2 and then they jump up to 4.8. What's going on, and how should I move? And so I thought that who is a better person to tell us all of this information than Ryan Skerritt. I'm a last name killer. So did I
You
say that
killed
right?
it. That was perfect.
Great, great. So Ryan, can I say that I'm loving this quarantine and connect? I'm really loving this quarantine and connect.
This is my quarantine beard, and with the new kind of norms here, I've been at home for a couple weeks, and I've been seeing what I can put together. Fortunately for me, the first couple weeks, no one had to see my awkward teenage phase where like it was just horrible.
Crimson Stubbles.
And now it's just coming in where at least like I'm not, at least my wife can look at me without laughing. So we're making progress on that front. So that's been one of the fun things that we're doing. And, I don't know, it's been, we have a lot of time on our hands, obviously.
Absolutely. So before we jump into business, I just want to say I hope you keep the beard after
I know,
quarantine.
all of our friends are saying that I don't typically grow a beard. I'm always clean shaven. You've known me for a while. I never have
Yeah,
beards. And
I really like it.
I'm getting a lot of good reviews on it. My mother hates it. She can't even look at me, but that's okay. I haven't had to see her much during this anyway. But the beard is, I think, staying. So we will see.
Good, good. So let's jump right into it. People are
Do it.
scared. They are terrified. It looks like we're going into another recession. People feel
Right.
like it's 20s all over again. It feels like 2008. How is the market?
The market right now is okay, right? It's at a point where I feel like we need a lot of the dust to settle here in order to have a true look at where the market will end up after all this. How long are we going to have to be in a situation where we're dealing with this virus, right? This is basically the driving factor behind this whole kind of crazy market we're in. And what I think we all need to get used to is a new normal, right? This is going
Mhm.
to be a new way that everyone across the industry has to buy into, get strong, grind, and kind of overcome it for all of our clients, right? And how we do that is just be transparent as possible. Let them know that, every day we're monitoring these situations. And the
Mhm.
second we have the information, we're going to give it to the people because every day is a new obstacle that we're overcoming, right? It started on the streets. It started with the smoke certs. Are we going to be able to get people closed because we don't have those smoke certs? Governor Baker made an amendment, allowed us to keep rolling with closings and kind of putting off needing the immediate smoke cert. So for a consumer, which I know we're most concerned about, those are our people that drive our business, that we care about putting in good situations. For our
Yes.
consumer, we are rolling, right? The government, both federally and locally, want real estate to keep continuing and to keep closing and to keep putting people in situations that they've worked so hard. They're not going to let this affect them and absolutely screw their whole credit profile up and make it so they can't close. So as
Mhm.
every day as this business is evolving, what's happening is we need to let people know what exactly is going on.
Okay,
So,
so let's do that exactly.
okay.
I'm not a buyer, I'm a seller, I'm a homeowner. And
Yep.
I'm scared to death because they just took me down from 6 days a week with overtime to 2 days a week. How does that affect my mortgage? And how, like, who do I contact? What do
Yep.
I do? I can't
So,
file for unemployment. I have no nest egg.
right.
I'm asked out.
So once again, I'm going to go back to communication and transparency. So every single month as a homeowner, we write checks, automatic payments, all to our servicers who take care of paying for our mortgages every single month. If I'm in a position where this month is going to be hard, or the foreseeable 3 to 4 months are going to be challenging because of my situation, I need to let my servicer know that. I need to call them and say, here's where I'm at. Here's my plan. What can we do?
And
And
what
if
are banks' response typically? Like, how are banks responding? What's the industry norm right now?
so, still very early as far as the stimulus package and what's going to be done on a federal and state kind of level. But right now, what I'm advising everyone to do is call the servicer, let them know your situation. Even before this, let's take this whole coronavirus thing out of this. Even before this, if people got cut hours or whatever it is, you still need to make that call to your servicer and say, here's where I'm at. There's payment modification plans where they can modify your loan for a little bit to catch up to your situation. There's programs and options that they have that can help people in monthly situations or for a little while they're facing these financial hardships that can really, free up some income, help them not get reported late. And you're showing your servicer that you're making an effort. If you're making an effort, just like in anything in life, if I'm making an effort, they're going to work with you. If you're just not going to call and not let them know where you're at and just keep letting the bills pile up and not be proactive, just like in anything in life, you're going to be in some trouble. So you need to be proactive and offensive in an environment like this.
So the first thing we want to do is, as soon as we get off this live, you want to call your servicer, aka your
Whoever
bank,
that bill, that
whoever
bill,
services your loan. And I said this yesterday on the credit is king live. Is that this isn't just for your mortgage. This is for your credit cards. This is for
right,
anything. Like, make sure you communicate because you have relationships with these people, and if you go silent during that relationship, it seems as if you don't care. And so
right,
I'm going to do what I need to do to protect myself because you're not communicating with me how I should move otherwise.
correct,
So I feel better, as a homeowner. I feel like I'm okay because all I have to do is call my servicer and let them know what's currently going on. They know what's going on. The world knows what's going on, but where
right,
I am in my position. So
right,
I'm a buyer. I'm in the middle of buying. I just signed my purchase and sales right before the stay at home.
right.
And I'm scared. Like, are we going to close? Is it going to close? Am I going to have to postpone? I'm in my rate lock
Right,
and it's a really good rate.
right.
What's the next steps for me?
So I would say this: if you're in the process where you're still trying to secure a contract and get a purchase and sales, your situation may be a little bit different than someone that already has a purchase and sale with a close date in the next month. So let's talk about someone that has a close date in the next month, is already under contract, locked in, and with Fairway, right? In all of this, I can only speak for Fairway Mortgage, Ryan Skerritt, 617 Back Bay, Fairway Boston. I'll tell you how we're rolling. We are rolling forward, right? We're going to close your loan. Your rate's good with us. We're not going to pull anything kind of crazy where all of a sudden we switch everything up and now we change your rate. We move your closing date back. If you're a conventional buyer, we're going to work with you. We'll get it closed. We'll update you as far as these smoke cert situations go, additional provisions that are being put in purchase and sales. If there's somehow, God forbid, martial law and you physically can't move, if it gets that bad, we're adding verbiage and protecting you if you're already in contract. Now, if you have a pre-approval out and you're actively searching, and this goes for anyone, what I want you to do is I want you to call your loan officer and I want you to say, how is my situation looking from the news that you're getting from the top? Am I still okay? Because there are a lot of changes going on. And like I said, I can only speak for Fairway Mortgage. I don't like to speculate, create rumors, and that's not a business that I'm in. But for Fairway, our conventional borrowers are great. We're moving forward strong, and we'll continue to do that.
What's going on with our FHA buyers that are currently in contract or about to secure contract?
So if you're in an FHA program and you're already,
Or VA
yep.
or
So you're going to start seeing, and it's only a matter of time, the government world start to shift a little bit. I think it's going to continue to function. However, I think these low interest rates are going to be driven up a bit. I think rates on the government business, which is typically lower than conventional rates, I think you're going to start to see these rates come up a little bit. I think they're also going to start putting some provisions in. And let me tell you why. Because it doesn't make much sense to, and I'm learning this every day too, because I'm on the street, right? I'm dealing with realtors, buyers, sellers, attorneys. Like, these are the people I deal with. I don't deal in the secondary market in servicing. And I really have learned in these past couple of weeks that I need to know that side of my business to be able to adequately explain what's going on. So with a government-backed mortgage, like an FHA mortgage, when you have a servicer, right, whether that homeowner makes their mortgage payment or not, the servicer every month still has to write a check to pay that mortgage. So if people who are unemployed now aren't able to make the payments, these servicers are now paying millions, a lot of money, right, to pay these mortgages because contractually they have to. Whereas compared to conventionally, if you don't make your payment, they have a little bit more leeway in time in not making your payment. So there's a lot more risk right now just in this environment we're in, which is temporary. I don't want to scare anyone, right? Like, we will beat this, we'll overcome this. It's going to be business as usual. But with the risk factor and servicers, you know, having to pay out these mortgages that may not be making the payments themselves, just looking at the unemployment numbers of over 3 million last week, this is concerning, right? This is part of the perfect storm here that can create a lot of companies to have major financial distress. And in this industry, we're all interconnected. So if one goes down, it all has ramifications on all of us.
all of us, yeah.
So that's kind of how the government world is functioning right now. It's still moving along fine. There's by no means saying we're not doing government business, but just be prepared for some changes that will come, possibly higher interest rates. And we're kind of dealing with that on a day-to-day. Right now, it's still functioning, you know, like I said, 100%, but we're going to get more information on that.
Why are interest rates fluctuating so drastically? Like, one day it's a 2.9 and then the next day it's a 4.8.
Yeah.
What is going
So I'll
on
bring you
your
back
end?
I'm just going to tell you my experience. I'll bring you back to early March. I woke up on a Monday. It was my single best day as an originator I've ever had in my life. Rates were at about 3%. I had locked every one of my purchase people in. I contacted, you know, at that point, you're an originator. You're like, oh my God, these rates are amazing. I'm going to contact everyone. My barber's calling all his friends, call Ryan. And everyone's pulling in these refinance applications. On Monday, like myself and every other originator that has any kind of book of business, we absolutely flooded the market. Like, flooded to a point where there was $11 trillion of mortgages. The majority of those mortgages could have benefited from a refinance. The industry on a very busy year can only handle $2 trillion of business. So we're approaching 6 times the amount of business that the industry can handle. There's only so many processors, underwriters, closers, time for attorneys, right? These are all, it doesn't matter how many mortgages I can bring in. If we can't service them and we can't deliver, then I look bad, right? And then Fairway looks bad, and then any company looks bad. So what happened on that Monday was we flooded the market. All of a sudden, Wednesday comes around And I think, so this is where it gets interesting, because every indicator you're looking at, right? Unemployment is usually good for mortgage rates. Mortgage rates should go down, yet they're not. The stock market and what's going on with the stock market and the Federal Reserve rate, all of these indicators are showing that mortgage rates should be extremely low and continue to drop. But what happened is on that early March Monday, we flooded the market, and we should, right? These are what we're supposed. We're in sales. We're want to help our clients lower interest rates. I mean, I have friends that were 7 months ago locking at 4 1/8, and now they're down to 3% in 6 months. So what happens is the market got flooded. The industry can't handle the volume. I don't care what bank, whoever you're talking to, everyone's putting on this friendly, strong face of we're good, we'll get it done, whatever. It's not good, right? It got so flooded that basically mortgage companies unified and came together, and you started seeing on that Wednesday not only rates go back to where they were, but they were climbing up to a 0.5% higher. You could go on Lending Tree, you could go on anywhere, and I saw refinance rates as high as 5-6% with points built in, just because they'll lend at that interest rate because they'll make so much money they can't walk away from it. They'll get it done. But these vanilla 3.5-3% refinances, there's so many of them they can't deal with it. So what happened is they basically had to raise interest rates. And then all of a sudden, as this flood of volumes coming into the market, boom, coronavirus. Hello, I'm here and I'm going to rock all of your markets. We're talking about 1,000+ losses in the stock market, unemployment numbers going through the roof, Federal Reserve rates going to 0%. And what's happening is there's so much uncertainty. And this is another problem. I mentioned the perfect storm, and I want you to realize that one is brewing. And companies that are not prepared are going to be nailed. When you have a mortgage and you send that mortgage to a servicer, and within 6 months they're refinancing, and you have these drastic fluctuations in interest rates, people are losing massive amounts of money, because when you lock an interest rate on the secondary market, you're hedging that bet. You're either going to short it or you're going to make money because the market's performing well, and you're actually going to gain some money on that interest rate. But with these fluctuations, obviously that makes it so hard even for the smartest of smart people to do, because the market's so volatile. It's doing things that aren't necessarily adding up for what traditionally happens. So that being said, you're just seeing all of these factors in the market that are creating a really uncertain future. Now, what I think will happen once the dust settles and we overcome this 3-6 months, I think it's going to go back to business as usual. We're in an unbelievable time. Before this, the economy was booming. This is kind of like how I think about it. This is kind of like us going into I don't know, a war, and being so prepared for this war that we were overly prepared. Every market was doing unbelievable. The housing market was cranking, appreciation levels, employment. People were making so much money in the stock market. Everyone went into this with their armor and their bodysuits fully on. Like, I know a lot of people live month to month, and listen, I get that, but I'm saying from an economic standpoint, across the board, we went into this full health, which is really good, because when we come back from this, it will be faster. And there's not so many X factors into the last, in 2008, there was a lot of sketchy stuff going on in our industry, lying about how good mortgages were, lying about appraised values. Like, this has nothing to do with that, right? This has to do with the virus that I believe in America. I believe in our scientists. I believe in our businesses, and I think that we'll overcome this. But for the next 3 to 6 months, I think we're going to have, peaks and valleys. I think that when the rates do come down and they get back to that 3%, you're going to have another flood. then they'll raise interest rates again to slow it back down. And it won't necessarily make sense if you're a data person. And the problem a lot of data people are having is they can't wrap their heads around it. They're like, well, why? It's a supply and demand issue, right? So that's
So
what's going
the
on.
number one question that everyone is asking is, should I wait for the market to crash before I buy? And should I sell right now before the market crashes? And Ryan says,
here we go. So here's what I'm telling all of my buyers that I deal with every day. And my message hasn't changed for my buyers from coronavirus, pre-coronavirus to now in coronavirus. What I want my buyers to think about is, does the market really matter if your payment is comfortable on a monthly basis every single month? And I know that's hard with unemployment right now and people tightening up. Like, I get that, but there's going to be assistance. There's going to be help through this time. What I'm talking about is, right now we're talking about a 1%, right? 1% of the time we're dealing with this virus. For the other, or call it 5%, for the other 95%, with your day-to-day life, how it's structured, your employment, your income, your normal schedule, is your mortgage payment doable? This is a question I ask everyone. If hours get cut a little bit, these are called life things, whether it's in the environment now or before. Are you comfortable with this payment?
So what happens, Ryan, if, I'm working 40 hours a week and plus 15 hours overtime throughout the week? I have a strong income, my credit's perfect, and all of a sudden, bam, I'm no longer working the hours that I was.
Yep.
I'm no longer taking in an income. I'm currently applying for unemployment. My job told me it's a layoff. It's not a timeout until we get back up and running. It's a complete layoff. And now I'm looking for a job, right? Do I stop my search now? Like, am I now no longer a viable candidate to purchase? And on top of that, I'm watching my money. So I'm in the house, I'm feeding kids, I'm still trying to pay bills, but I'm watching my savings dwindle. And that was for my closing costs. That was for my down payment. And so now I kind of have to start all over again. And God forbid, my servicers, my providers are now hitting my credit. How does that affect me 3 to 6 months from now when I get back into the market to buy, but I have 16 different pings on my credit because of coronavirus?
Right. And I think that's where you're going to see across the board on all levels. I'll go as low as utilities, right? We've all gotten notices from National Grid saying, during this outbreak, during this time of where we're distressed, we will not be shutting off gas. We will not be shutting off water. We will not, any of these utility bills, they're not going to be drilling you for lates. Once again, like we talked about earlier, it's important to communicate and call these people and say, here's what's going on. Single dad, single mom, a family that just, is in a situation where we're trying to figure out our next step. Here's where I'm at. They're not going to be just devastating your credit profile if you open up the lines of communication. However, if you're one of these people that just gets the mail, which I've been guilty of, gets the mail, puts it in the junk pile and says, oh, I'll deal with this later, and it keeps getting worse, piling up and everything, then you do run the risk of getting these lates because they don't know what's going on with you. So number one takeaway from this call is, if you are in a position where you're looking at your next 30 to 60 days and you're saying, I'm in trouble, let's just see this. Ready? So 60 days times 24 hours in a day, you have 1,440 hours to make phone calls to these people you are going to owe money to. And you need to say, here's where I'm at. The virus has devastated my family. I've always paid you on time. I will continue when I get back on my feet. What are my options? Here, what can we do? And you will be shocked by the responses you get. People are unifying during this. They really are. And if you have trouble, if you're having any kind of issue, talk to people like you, talk to people like me. We're dealing with this on so many levels because we talk to people about their finances, we help them out, we're very involved in their day-to-day like plan, right, of becoming homeowners, their credit profile. Like, call me. I've had these conversations for the past 2 weeks of, well, what do I do? Should I stop my search? I think even if this was a situation that didn't have to do with the coronavirus and the economy was doing well, and you got into a situation where, the jobs started changing a little bit, we need to address that no matter what's going on, because I don't want to, you have to sleep at night. I have to sleep at night. I'm not going to put someone in a mortgage just because I can get the paperwork done. If
Exactly.
I know that you're in a situation by the time your first payment's due,
Exactly.
that you are not in a position to make the payment. So let's have that hard conversation. Let's find ways that we can protect that savings, that's your down payment. Let's come up with other options, right? And the only way to do that is through conversating and over communicating, which needs to happen now.
Thank you, Ryan. I believe we answered all of the like pertinent questions that people had regarding real estate, regarding buying and selling, the market, interest rates. Is there anything else that we didn't cover that you want to let consumers know, buyers, sellers, current homeowners, current renters that want to become homeowners?
Right. Here's what I want to let everyone know. I want everyone to know that we will come out on the other side of this, right? No matter what. And I want them to know that planning is a good thing. Being a year or two out from buying a home and having this conversation is a good thing. I want people to call me. I want people to talk to you, and I want them to get their plans in place during good times and bad times, because this is life. This is going to be good and bad, not just one time here, 10 years from now. Look at historical data. Every 10 years, there's a dip in the economy. That means the average person is going to go through something like this 5, 6, 7 times, right? So how do we get strong, and how do we create good plans to deal with these things? We talk to people that operate in financial worlds. Taylor Andre, Ryan Skerritt. We have fantastic attorneys. And what we do is we create plans and we advise our networks on how to move forward and dominate and not be burned through the media, which I have a huge problem with. And I want everyone to know that the media is very misleading on where mortgage rates are at, on what's really happening. Call a professional that can actually give you a rate, right? CNN, Fox News, I don't care what you listen to, they can't get you an interest rate. I can.
How do we contact you, Ryan?
Okay, the best way to contact me is, I love phone calls. So my phone number is 978-852-6145. And
one more time.
978-852-6145. And I just like to have conversations. Normally, I'm a face-to-face guy. I love to meet people face-to-face. That's probably not good right now. But we need to have phone live conversations, come up with a playbook, come up with our plan, and be offensive. Don't sit on the sidelines and let everything just pass you by, because you will get screwed. You will. But if you're offensive, throw the football, be proactive, you will have success. You will be protected. There are so many resources out there, and there's so many people willing to help. So don't put yourself in a hole. Just stay positive, grind. America is the best country in the world. I swear to God, it is, and we will be okay. But just please don't be stagnant. That's my message.
Ryan, we thank you. We love you. We appreciate you. I know you're busy doing a whole bunch of catching up. Keep the beard. We like it.
Thank you. Thank you.
And if you
so
guys
much
have
for
any other
having me.
questions that we did not cover, just hit me in the inbox, TaylaAndre. You can hit me directly at 617-459-0041. Ryan, thank you so much. And if we have any other questions, I'm going to make sure that we connect you with a professional, because I might know a little bit, but I want Ryan knows the ins and the outs. the front end, the back end. And so I'm gonna make sure that you're connected with a professional and not just giving you, you know, fake news or
Yeah.
half-assed truths. Like I
And
want
people
you to
get
get the full
scared.
story.
They get scared, Taylor. Like some people people you directly know will be putting on fronts that everything is okay. I'm not in that business. I'm going to tell you what the facts are. I'm going to tell you how we're going to overcome any barriers, and I'm not going to put on a fake smile. There is turmoil. There are problems. We will get through them. All
Thank
right.
you,
Thank
Ryan.
you for having me with
I love
everyone.
you.
I love you too. Thank you for having me with your whole audience. I really
Always.
appreciate it. All right.
Peace.
Thank you. Bye bye.